Class 11 Accountancy Numerical Problems Solutions. Presented by NCERT.com. In this video, we are going to provide financial statements 2 or financial statements with adjustments. Problem 1 solution. The problem statement is as follows. By the way, reading this problem statement is going to take some time. If you want, directly skip to the adjustments section of the problem statement or directly to the recap or analysis. The chapter links are provided in the description. So you can skip this section and directly jump to the section that you want. Prepare a trading and profit and loss account for the year ending March 31st, 2000 XA from the balances extracted of Messrs. Rahul Sons. Also prepare a balance sheet at the end of the year. To display the balances, let us have a balances table. On the left hand side, we have account title and amount in rupees. Similarly, on the right hand side also, let us have the account title as well as amount in rupees. Also, just to recall, the debit balances will be on the left hand side and the credit balances will be on the right hand side. Stock balance is 50,000 rupees. Sales balance is 1,80,000 rupees. Wages balance is 3,000 rupees. Purchases return balance is 2,000 rupees. Salary balance is 8,000 rupees. Discount received balance is 500 rupees. Purchases balance is 1,75,000 rupees. Provision for doubtful debts balance is 2,500 rupees. Sales return balance is 3,000 rupees. Capital balance is 3 lakh rupees. Sundry debtors balance is 82,000 rupees. Bills payable balance is 22,000 rupees. Discount allowed balance is 1,000 rupees. Commission received balance is 4,000 rupees. Insurance balance is 3,200 rupees. Rent balance is 6,000 rupees. Rent, rates and taxes balance is 4,300 rupees. Loan balance is 34,800 rupees. Fixtures and Fittings balance is 20,000 rupees. Trade expenses balance is 1,500 rupees. Bad debts balance is 2,000 rupees. Drawings balance is 32,000 rupees. Repair and renewals balance is 1,600 rupees. Traveling expenses balance is 4,200 rupees. Postage balance is 300 rupees. Telegram expenses balance is 200 rupees. Legal fees is 500 rupees. Bills receivable balance is 50,000 rupees. Building balance is 1,10,000 rupees. Now the total of all the debit balances is 5,51,800 rupees. Similarly, the total of all the credit balances is 5,51,800 rupees. In addition to these balances, there are few adjustments given in the problem. The first adjustment is commission received in advance 1,000 rupees. The second adjustment is rent receivable is 2,000 rupees. The third adjustment is salary outstanding is 1,000 rupees and insurance prepaid is 800 rupees. The fourth adjustment is the further bad debts are 1,000 rupees and provision for doubtful debts at the rate of 5% on debtors and discount on debtors at the rate of 2%. The fifth adjustment is related to the closing stock, which is 32,000 rupees. The sixth adjustment is related to the depreciation on building at the rate of 6% per annum. Before we proceed with the analysis of this problem, let's first do a small recap regarding the treatment of various adjustments. I'm going to prepare a small table here. Let's have a column for item. When this occurs in advance, let's have a column for how we are going to treat this in the profit and loss account and a column for how we are going to treat this in the balance sheet. When this item is either outstanding or accrued, let's have a column for how we are going to treat this in the profit and loss account and a column for how we are going to treat this in the balance sheet. When we consider an expense, if this expense is paid for in advance, then the advance payment is for the next accounting period. It will not be for the current accounting period. So the effect of the adjustment is to make the expense less. Now, as this expense is paid in advance, we should consider this as an asset in the balance sheet. Similarly, if this expense is outstanding, then we should add it to the already incurred expense. Outstanding means that the expense is due, but we have not yet paid for this expense. Even if the expense is not paid, it is still incurred in the current accounting period. So we should add it to the expenses. As this expense is not yet paid, it will be treated as liability in the balance sheet. Similarly, if we consider income, if the income is received in advance, it should not be considered as an income in the current accounting period. As it is received in advance, it should go to the next accounting period. So it has a tendency to lessen the revenue earned in the current accounting period. Also, as this revenue is received in advance, before goods are delivered or services are rendered, we should treat this as a liability in the current accounting period. Similarly, if there is any revenue that is accrued, if there is any revenue that we are supposed to receive but not yet received, we should still treat this revenue as part of the current accounting period. So it has a tendency to add to the already projected revenue in the current accounting period. Similarly, it will be shown as an asset in the balance sheet. With this information at our disposal, let us now proceed with the analysis of the given problem. It is given in the problem that we should prepare the trading and profit and loss account. In addition, we should also prepare the balance sheet. Also, there are few adjustments in the given problem. The first adjustment is commission received in advance. We should consider this when dealing with the commission received. So let's mark the commission received balance item with the adjustment number 1. See, these markings should help you to consider the corresponding adjustments without forgetting about them. Now the second adjustment is related to the rent receivable. So this should be considered when dealing with the balance related to the rent received. Let's mark the adjustment 2 beside the rent related balance. By the way, we have a rent on the left side also. Why did we mark the rent on the right hand side? This is because it is clearly given in the adjustment statement that this is rent receivable. So it should belong to the revenue side. If it was given that it's outstanding rent, then we should have considered it on the expenses side. Anyway, that is just for your information. Now, the third adjustment is related to the salary outstanding. So let's mark the salary expense related balance on the left hand side with the adjustment number 3. It is also given in the adjustment number 3 that the insurance prepaid is 800 rupees. So let's mark the insurance related balance also with adjustment number 3. Now the fourth adjustment has multiple debtor related adjustments. The first one is related to further bad debts. These need to be adjusted when dealing with the debtors asset in the balance sheet as well as when dealing with the further bad debts in the profit and loss account. The next adjustment is related to the provision for doubtful debts. This will adjust the debtors in the balance sheet. This will also adjust the bad debts in the profit and loss account. When we make a new provision for doubtful debts, we should also consider the old provision for doubtful debts. Now the next adjustment is related to the discount on the debtors. Note that this is a separate expense and it should go into the profit and loss account. Also, it will affect the debtors in the balance sheet. The next adjustment is related to the closing stock. So this will appear on the revenue side in the trading account. I repeat, it is the trading account, not the profit and loss account. It will also appear on the asset side of the balance sheet and should be considered when preparing the balance sheet. The next adjustment is related to the depreciation on building. As you know, the depreciation is an operating expense and it should go on the expenses side of the profit and loss account. As the depreciation is calculated on the building, it should be deducted from the building asset balance in the balance sheet. With this information at our disposal, let's now proceed with the preparation of the trading and profit and loss account as well as the balance sheet. Let's first prepare the format of the trading and profit and loss account. Let us first write the title as Trading and Profit and Loss Account of Mrs. Rahul Sons for the year ending March 31st, 2000 XA. Let us have the DR and CR headers to designate the debit and credit sides. Let us now have the individual columns for expenses or losses and amount in rupees on the debit side. The revenues or gains and amount in rupees on the credit side. Also note that we are not preparing separate accounts for the trading account as well as the profit and loss account. As you know, both of them are shown together as a common trading and profit and loss account. The first balance that we need to deal with is the stock, which is nothing but the opening stock. Now, this opening stock is given as 50,000 rupees. See, the opening stock exists as current asset at the beginning of the accounting period. But as the business starts selling the goods, the opening stock becomes an expense. So we should consider it in the trading account as it represents the cost of the goods sold. Let us first write the opening stock in the expenses losses column on the debit side. Let us then write the opening stock amount of 50,000 rupees in the amount column. After the stock, we should look for the purchases. So we have purchases worth of 1,75,000 rupees. One more thing that we need to remember is that whenever there are any purchases, we should also look for purchase returns. Sometimes these purchase returns are given as returns outwards. So here we see that there are purchase returns worth of 2,000 rupees. We should consider these two together. So the rule is to always look for the purchase returns or returns outwards when dealing with the purchases. So let's write purchases in the trading account and the corresponding amount of 1,75,000 rupees. Now from the purchases, we have to subtract the purchase returns. So let's lessen the purchase returns from the purchases. The corresponding purchase returns amount is 2,000 rupees. Now from 1,75,000 rupees, if we subtract 2,000 rupees, we get 1,73,000 rupees. We write this amount in the amount column. The next item that we should consider in the given balances is the sales, whose balance amount is 1,80,000 rupees. Just like purchases, when we are dealing with the sales, we should look for sales returns. Sometimes this is given as returns inwards. So in these balances, the sales returns are given as 3,000 rupees. So let's write sales in the trading account on the credit side. The corresponding sales amount is 1,80,000 rupees. Now from these sales, we should subtract the sales returns. So let us lessen the sales returns from the sales. The corresponding sales returns amount is 3,000 rupees. Now from 1,80,000 rupees, if we subtract 3,000 rupees, we get 1,77,000 rupees. We write this amount in the amount column. So the next item that we should consider for the trading account is wages. The corresponding balance amount is given as 3,000 rupees. So let's write wages in the expenses column of the trading account and the corresponding amount of 3,000 rupees in the amount column. Now, if you scan the balances, we don't find any other balances that we should consider in the trading account. So the last entry that we should look for in the trading account is the closing stock. As we have already discussed in the adjustments, it is given that the closing stock is 32,000 rupees. So let's write the closing stock in the revenue side. The corresponding closing stock amount is 32,000 rupees. As there are no more entries, let's now proceed with finding the totals. The total on the expenses side of the trading account is 2,26,000 rupees. Similarly, the total on the revenue side of the trading account is 2,09,000 rupees. From the total on the expenses side, which is 2,26,000 rupees, if we subtract the total on the revenue side, which is 2,09,000 rupees, we get 17,000 rupees. Now, if we see here, the expenses are more than the revenue. So, the business has incurred a gross loss in this accounting period. Now, this gross loss should be carried down to the profit and loss account. Also note that as this is a debit balance, it should be written on the credit side. So, let's write the gross loss carried down on the credit side. Let us also write the gross loss amount of 17,000 rupees on the credit side. Now the total on the debit side of the trading account is 2,26,000 rupees. Also, the total on the credit side of the trading account is 2,26,000 rupees. So the trading account is balanced. Now, after completing the trading account, we should bring down the gross loss from the trading account to the profit and loss account. If it is gross profit, we bring it down on the credit side. If it is gross loss, we bring it down on the debit side. Now, in this case, as we have the gross loss, let's bring it down on the debit side. So let's first write gross loss brought down on the debit side. The corresponding amount is 17,000 rupees. Note that either gross loss or gross profit will always be the first entry in the profit and loss account. Now, after this entry, let us see what is the next entry in the trial balance to bring it down to the profit and loss account. So, the next entry in the profit and loss account will be salary balance of 8,000 rupees. Note that, as we have already discussed, the salary has an adjustment given as outstanding salary amount of 1,000 rupees. The corresponding entry would be to debit the salary account and to credit the outstanding salary account. Now, as the salary is an expense, it should be added to the salary in the profit and loss account. And this new account, outstanding salaries balance, should go into the balance sheet as a liability. With this information at our disposal, let's now post the salary related postings into the profit and loss account. Let's first write the salary on the expenses side. The corresponding salary amount is 8,000 rupees. Now, as we have already discussed, we need to add the outstanding salary to the existing salary amount. Let's then write the corresponding outstanding salary amount of 1,000 rupees. Now, if we add 8,000 rupees and 1,000 rupees, we get 9,000 rupees, and this amount should be written in the amount column. So, we are done with the salary related posting in the profit and loss account. Let's now proceed to consider the next entry. The next entry is related to the discount received and its balance is 500 rupees. Now, this discount received is non-operating income and it should be posted on the credit side. Let's write discount received on the credit side of the profit and loss account. Let's then write the credit amount of 500 rupees into the amount column. With that, we have completed the posting of the discount received related balance into the profit and loss account. Let's now take up the next entry in the trial balance. The next entry in the trial balance is related to the provision for doubtful debts. But let's consider it when dealing with the bad debts as it should go with the bad debts. So the next entry that we should deal with is capital. As we know, capital should go into the balance sheet. So let's consider it when dealing with the balance sheet. So let's consider the next entry. As you can see, the next entry is Sundry Debtors. As we know, we should consider the Sundry Debtors when handling the balance sheet. So let's leave it there and jump to the next entry. The next balance is bills payable. As you know, this should go into the balance sheet on the liabilities side. So the next entry that we should consider is the discount allowed. Note that this is discount allowed. Discount allowed should not be confused with the discount received. Discount allowed is an expense and discount received is an income. We should have a clear understanding about this fact. Now it's given that the discount allowed balance is 1,000 rupees. To post this, let's first write discount allowed into the profit and loss account on the debit or expenses side. Let's then write the corresponding debit amount of 1,000 rupees into the amount column. With that, we have completed the posting of the discount allowed related entry into the profit and loss account. Let us now consider the next entry in the trial balance. The next entry in the trial balance is commission received, which is equal to 4,000 rupees. As you can see, we have marked that this commission received requires some adjustment. So let's see what it is. The adjustment is that the commission received in advance is 1,000 rupees. As we know, the commission received in advance is for the next accounting period. So we should reduce this accounting period's commission received by 1,000 rupees. As you know, commission received is an income. The rule to record any decrease in the revenue is to debit the corresponding revenues account. So we should debit the commission received account. At the same time, as this commission is received in advance, it should become liability and should go into the new account called commission received in advance account. Now the commission received is revenue and it should go into the profit and loss account. And commission received in advance is a liability. So we should handle it when dealing with the balance sheet. So let's first write the commission received in the profit and loss account on the revenues or credit side. The corresponding commission received amount is 4,000 rupees. Now we should lessen the advance commission as already discussed. The amount that we should reduce is 1,000 rupees. Now from 4,000 rupees, if we subtract 1,000 rupees, we get 3,000 rupees. We should write this amount in the amount column. With that, we have completed the posting of the commission received related entries into the profit and loss account. Let's now consider the next entry. The next entry that we should deal with in the trial balance is related to the insurance that has a balance of 3,200 rupees. As we have already marked, this insurance has an adjustment to be made. Let us now see what the adjustment is. The adjustment entry is given as insurance prepaid is 800 rupees. As we know, insurance is an expense. When this insurance is paid in advance, the expense does not belong to this accounting period, as it is paid in advance. As it is paid in advance, it should belong to the next accounting period, right? So we should reduce the prepaid insurance amount from this year's insurance expenses. As we know, the rule to record any decrease in an expense is to create the corresponding expenses account. In this case, we should create the insurance account. At the same time, as this insurance is paid in advance, it should be added to the prepaid insurance account. Now, as insurance is an expense, it should go into the profit and loss account. As prepaid insurance is considered as an asset, we should post it in the balance sheet on the asset side when we are dealing with the balance sheet. So let's first write the insurance on the expenses side in the profit and loss account. The corresponding insurance amount is 3,200 rupees. From this insurance expense, we should lessen the prepaid insurance as it belongs to the next accounting period. The corresponding amount is 800 rupees. Now, from 3,200 rupees, if we subtract 800 rupees, we get 2,400 rupees, which we write in the amount column. With that, we have completed the posting of the insurance related entries into the profit and loss account. Let's now take up the next entry in the trial balance. The next entry in the trial balance is related to the rent received, which is amounting to 6,000 rupees. As you can see, we have marked that the rent has an adjustment. So, the rent related adjustment entry is given as rent receivable is 2,000 rupees. This is nothing but accrued rent. See, we have not yet received this rent, but it still belongs to the current accounting period. So, it should be added to the rent received revenue. In other words, the rent revenue is increasing. The rule to record any increase in the revenue is to create the corresponding revenue account. In this case, we should create the rent account. At the same time, as this rent is not yet received, it should be debited into the new account, namely accrued rent. Now, as rent is revenue, it should go into the profit and loss account on the revenues or credit side, and the accrued rent is an asset. It should go on the asset side when preparing the balance sheet. So with this information at our disposal, let's now post the rent related entries into the profit and loss account. Let's first write rent on the revenues or credit side. The corresponding rent amount is 6,000 rupees. To this, we should add the accrued rent as the rent receivable belongs to the current accounting period. The corresponding accrued rent amount is 2,000 rupees. Now, if we add 6,000 rupees and 2,000 rupees, we get 8,000 rupees. This amount should be written in the amount column. With that, we have completed the posting of the rent related postings into the profit and loss account. Let's now take up the next entry in the trial balance. The next entry in the trial balance is related to the rent, rates and taxes, which has a balance of 4,300 rupees. This is an expense. So let's post this on the expenses or debit side of the profit and loss account. Let's first write rent, rates and taxes on the expenses or debit side. Let's then write the corresponding debit amount of 4,300 rupees into the amount column. With that, we have completed the posting of the rent, rates and taxes related expenses balance into the profit and loss account. Let's now take up the next entry in the trial balance. The next entry in the trial balance is related to a loan amount of 34,800 rupees. Loan should go on the liabilities side of the balance sheet. So let's handle it when dealing with the balance sheet. Now the next entry is Fixtures and Fittings. This is an asset. So it should also go on the asset side of the balance sheet. So let's deal with it when we are preparing the balance sheet. Now the next entry that we should consider is trade expense, which has a balance of 1,500 rupees. By the way, don't get confused by the name trade expenses. Even though the name says they are trade expenses, they should still belong to the profit and loss account and not the trade account. Considering that, let's proceed to post this balance into the profit and loss account. Let's first write trade expenses on the expenses or debit side of the profit and loss account. Let's then write the corresponding amount of 1500 rupees into the amount column. With that, we have completed the posting of the trade expenses into the profit and loss account. Let's now take up the next entry in the trial balance. The next entry that we should deal with in the trial balance is related to the bad debts that have a balance of 2000 rupees. As you can see, we marked that the bad debts required some adjustments. Let's deal with those adjustments. Here it is given that the further bad debts are 1000 rupees. Further bad debts are nothing but additional bad debts. So they should be added to the bad debts account. As we know, bad debts are expenses or losses for the business. The rule to record any loss for the business is to debit the corresponding losses account. In this case, we should debit the bad debts account. At the same time, as the bad debts represents the debts that cannot be recovered, they reduce the debtor assets of the business. The rule to record any decrease in the asset is to create the corresponding assets account. In this case, we should create the debtors account. Now, as bad debts are losses, they should go into the expenses or losses side of the business. Now, as the debtors are assets, the reduction in the debtors asset should be shown on the asset side when we deal with the balance sheet. As we can see, we should make the adjustment for provision for doubtful debts also. But with the information that is available to us so far, let's first post the bad debts related balance into the profit and loss account and then come back and dig the provision for doubtful debts. Let us first write bad debts on the expenses or debit side of the profit and loss account. Let us also write the bad debts amount of 2000 rupees. Let us then add further bad debts also to the existing bad debts. The corresponding amount is 1000 rupees. With that, we have completed the considering the bad debts and further bad debts related amounts in the profit and loss account. As already discussed, let us now consider the provision for doubtful debts. Now, in the adjustments, it's given that the provision for doubtful debts is 5% on the debtors. We know that the debtors balance is 82,000 rupees. We also know that further bad debts are 1000 rupees. So, with these details, let's calculate the provision for doubtful debts. In the working notes, let's write subheading provision for doubtful debts to indicate that the upcoming calculation is related to the provision for doubtful debts. Now, the debtors amount is 82,000 rupees. Further bad debts are 1000 rupees. From 82,000 rupees, if we subtract 1000 rupees, we get 81,000 rupees. This means that the business can create a provision on these 81,000 rupees worth of debtors. See, we cannot create a provision on the further bad debts. Further bad debts means that it is confirmed that the debtors won't pay at all. So, we don't create a provision on them. We need to create a provision only on the remaining debtors after subtracting the further bad debts. Now, it is given in the adjustments that the provision for doubtful debts is 5% on the debtors. So, let's multiply these 81,000 rupees with 5 upon 100. This will give us the provision for doubtful debts. Let us cancel 2 zeros in 100 for the 2 zeros in 81,000 rupees. If we multiply the remaining 810 rupees with 5, we get 4050 rupees. This is the provision for bad debts. The corresponding entries are to debit the bad debts account and to credit the provision for doubtful debts account. Now, as the bad debts are losses, they should go into the profit and loss account on the losses or debit side. And the provision for doubtful debts is a contra asset account. So, it should go on the asset side of the balance sheet and should be subtracted from the debtors. I repeat, it's not an asset, it's a contra asset. So, it should be subtracted from the debtors asset. It should not be considered as an asset, it should be subtracted from the debtors asset. But we will deal with it when handling the balance sheet. With this information at our disposal, let us now proceed to add this new provision to the bad debts in the profit and loss account. We post this as an addition of new provision for bad debts. The corresponding amount is 4050 rupees. Now, there is one more thing that we should consider. When we add the new provision, we should also reduce the old provision from bad debts. Now, it is given in the problem that the provision for doubtful debts is 2500 rupees. So, we should lessen the old provision from the bad debts. The corresponding amount is 2500 rupees. Now to the 2000 rupees of bad debts, if we add 1000 rupees of further bad debts and also add 4050 rupees of new provision and subtract 2500 rupees of old provision, we get 4550 rupees. This should be written in the amount column. After completing the bad debts related entries, we should then consider the discount on the debtors. Note here that unlike the previous two adjustments which are related to the bad debts related losses, this discount on debtors is an expense. So it should be treated separately in the profit and loss account. So it is given that the adjustment related to the discount on debtors is 2%. So let's calculate the discount on debtors. Before proceeding with the calculation, there is one thing that we should be aware of. The discount is provided only for those debtors who are likely to pay the business back. That means that we should exclude the bad debts and provision for doubtful debts before calculating the discount on debtors. With this information at our disposal, let us now proceed to calculate the discount on the debtors. Let us first write the heading as discount on debtors. Now it is given in the problem that the debtors are worth of 82,000 rupees. The further bad debts are worth of 1000 rupees. And the provision for doubtful debts is 4050 rupees. From 82,000 rupees, if we subtract 1000 rupees and 4050 rupees, we get 76,950 rupees. This is the worth of the debtors that are recoverable. Also note that we didn't consider the bad debts here. The debtors balance is given to us after excluding the bad debts. So we don't have to consider the bad debts again. It is only the further bad debts and provision for doubtful debts that we have to subtract for calculating the discount on debtors. Now as it is given that the discount on debtors is 2%, let us multiply this 76,950 rupees with 2 upon 100. Multiplying this 76,950 with 2, we get 1,53,900. And in the denominator we have 100. Now let's cancel the two zeros in the numerator for the two zeros in the denominator. The resulting value is 1,539 rupees. This is the discount that we are going to give to the debtors. Now the discount is an expense. So we should debit the discount on debtors account. At the same time, when we provide the discount, it is going to reduce the amount that we collect from the debtors. So we should create the debtors account. Now as discount on debtors is an expense, it should go on the expenses side of the profit and loss account. Also, as the debtors are assets for the business, this reduction in the debtors asset should be shown in the balance sheet. So let's first post this expense in the profit and loss account. We will deal with the debtors when handling the balance sheet. So let's first write discount on debtors on the expenses side of the profit and loss account. Let's then write the discount on debtors amount of 1,539 rupees in the amount column. With that, we have completed the posting of the discount on debtors related posting into the profit and loss account. Let us now consider the next balance in the balance sheet. The next balance is related to the drawings. As you know, the drawings are contra account of capital. So it should be presented in the balance sheet. So let's deal with the next balance. The next balance is related to the repairs and renewals which are amounting to 1,600 rupees. Let us now post this balance into the profit and loss account. Let us first write repair and renewals into the expenses column on the debit side of the profit and loss account. Let's then write the corresponding balance of 1,600 rupees into the amount column. With that, we have completed the posting of the repairs and renewals related balance into the profit and loss account. Let us now consider the next balance. The next balance is related to the travelling expenses which are amounting to 4,200 rupees. Let us now post this balance into the profit and loss account. Let us first write travelling expenses into the expenses column on the debit side of the profit and loss account. Let us then write the corresponding expenses balance of 4,200 rupees into the amount column. With that, we have completed the posting of the travelling expenses related balance into the profit and loss account. Let us now consider the next balance. The next balance is related to the postage amounting to 300 rupees. As you know, postage is an expenses account. So we should post this into the profit and loss account. Let us first write postage into the expenses column on the debit side of the profit and loss account. Let us then write the corresponding postage amount of 300 rupees into the amount column. With that, we have completed the posting of the postage related posting into the profit and loss account. Let us now consider the next balance. The next balance is related to telegram expenses that has a balance of 200 rupees. Just like the previous balance, this is also an expense balance and it should be posted in the profit and loss account. Let us first write telegram expenses into the expenses column on the debit side of the profit and loss account. Let us then write the corresponding telegram expenses amount of 200 rupees into the amount column. With that, we have completed the posting of the telegram expenses related posting into the profit and loss account. Let us now consider the next balance. The next balance is related to legal fees that has a balance of 500 rupees. Just like the previous balance, this is also an expense balance and it should be posted in the profit and loss account. Let's first write legal fees into the expenses column on the debit side of the profit and loss account. Let's then write the corresponding legal fees expenses amount of 500 rupees into the amount column. With that, we have completed the posting of the legal fees related posting into the profit and loss account. Let's now consider the next balance. The next balance is given as the balance of bills receivable is 50,000 rupees. As you know, the bills receivable are assets of the business. So this balance should go into the balance sheet. Now the next balance is given as building worth of 1,10,000 rupees. As you know, the building is an asset and its balance should go into the balance sheet. As you can see, we have marked that this building has an adjustment. So let us see what the adjustment is. Here the adjustment is given as the depreciation on the building is 6% per annum. So let's calculate what the depreciation is. Let's first write the heading as depreciation on building. Now the worth of the building is 1,10,000 rupees. To get the depreciation, we should multiply this worth of the building with the depreciation rate of 6 upon 100. Let's cancel 2 zeros in 100 for the 2 zeros in 1,10,000 rupees. Now if we multiply the remaining 11 hundreds with 6, we get 6,600 rupees. As you know, the depreciation is an operating expense and we post the depreciation by debiting the depreciation account. At the same time, as the depreciation is reducing the worth of the building, we should credit the building account. Now, as the depreciation is an operating expense, it should go into the profit and loss account. And as the depreciation reduces the book value of the building, we should subtract the depreciation from the building asset in the balance sheet. So, let's first post the depreciation amount in the profit and loss account. Let's first write depreciation on building on the debit side in the expenses column. The corresponding expenses amount is 6,600 rupees. With that, we have completed the posting of the depreciation related entry into the profit and loss account. In fact, we have completed the posting of all the entries into the profit and loss account. The next step is to find the total and balance the profit and loss account. Now, the total of the profit and loss account on the expenses or losses or the debit side is 54,689 rupees. Similarly, the total on the revenues or gains or credit side of the profit and loss account is 11,500 rupees. From the total on the debit side, which is 54,689 rupees, if we subtract the total on the credit side, which is 11,500 rupees, we get 43,189 rupees. Also, this means that the expenses are more than the revenues. In other words, this indicates a net loss and it should be written on the credit side. Also, we should carry this net loss to the balance sheet. We'll do it when preparing the balance sheet. Let's first write net loss in the revenues or gains column on the credit side. Let's then write the net loss amount of 43,189 rupees in the amount column. Also, as we discussed, we should carry this net loss to the balance sheet. Now, the total on the debit side of the profit and loss account is 54,689 rupees. Similarly, the total on the credit side of the profit and loss account is 54,689 rupees. So, the profit and loss account is balanced. After balancing the profit and loss account, let us now proceed with the preparation of the balance sheet. Let's first write the title of the balance sheet as Balance Sheet of Messrs. Rahul and Sons as on March 31st, 2000 XA. Let's then have the individual columns for liabilities and amount in rupees on the left side. Similarly, let's have the columns for assets and amount in rupees on the right side. Now let's consider each of the items that should go into the balance sheet. Also note that when we prepare the balance sheet, it is a standard practice to post the assets or liabilities in the increasing or decreasing order of liquidity. However, In this video, I am going to post the asset and liabilities in the order they are appearing in the trial balance or adjustments or calculations. This is to make the things less complicated. Once we are done with the preparation of the balance sheet, you can arrange the balance sheet items in the increasing or decreasing order of liquidity. So the first item that should go into the balance sheet is the capital, which is worth of 3 lakh rupees. As you know, we write the capital on the liabilities side. So let's first write capital in the liabilities column. Let's then write the capital amount of 3 lakh rupees. Now, there is something that you should remember. Whenever there is capital, we should always look for any drawings. The capital and drawings should go together. So, from the trial balance, we see that the business owner has made drawings worth of 32,000 rupees. Let's post this information into the balance sheet. As the drawings reduce the capital, let's write less drawings. Let's then write the drawings amount of 32,000 rupees. Note that this amount should be subtracted from the capital. Now, along with the drawings, one more item that we should consider is the net profit or net loss. If there is a net profit, it should be added to the capital. If there is a net loss, it should be subtracted from the capital. We have seen from the profit and loss account that the business has incurred a net loss worth of 43,189 rupees. This net loss will reduce the capital. So let's write less net loss under the capital. Let's then write the net loss amount of 43,189 rupees. Note that this amount should be subtracted from the capital. Now from the capital, which is 3 lakh rupees, if we subtract the drawings worth of 32,000 rupees and also net loss worth of 43,189 rupees, we get 2,24,811 rupees. This is the capital at the end of the accounting period. Let's now take up the next balance. The next balance is that the sundry debtors, which are worth of 82,000 rupees. Also, we see that there are few adjustments to the sundry debtors. But first, let's post the sundry debtors in the balance sheet. As you know, as the sundry debtors are assets, we should post them on the asset side of the balance sheet. Let's first write debtors. Let's then write the debtors amount of 82,000 rupees. Now, after posting the debtors, we should subtract the further bad debts. So, remember this, whenever you are preparing a balance sheet, there are a few standard adjustments to be made to the debtors. The first one is further bad debts. As the further bad debts reduce the debtors, let's write it as less further bad debts. Also, there is one confusing thing here. We should not reduce the bad debts from the debtors. It is only the further bad debts that we should reduce. This is because this balance of the debtors, which is 82,000 rupees, is obtained after reducing the bad debts. So we should not deduct the bad debts again. Anyway, that is just for your information. Now we have further bad debts which are given as 1,000 rupees. So let's write further bad debts as 1,000 rupees in the balance sheet under the debtors. This 1,000 rupees should be subtracted from the debtors amount. Now after further bad debts, the next adjustment that should be made to the debtors is the new provision for bad debts. The provision for bad debts reduces the debtors asset. So let's write less new provision. As we have already calculated, the provision for doubtful debts is 4,050 rupees. So let's write this new provision amount of 4,050 rupees in the balance sheet under the debtors. This 4,050 rupees should also be subtracted from the debtors amount. After these two, the next adjustment that should be made to the debtors asset is the discount on the debtors. When you are providing discount to the debtors, the amount to be collected from the debtors will reduce. So let's write less discount on debtors under debtors asset. Now, as we have already calculated, the discount on debtors is 1,539 rupees. So let's write the discount on debtors amount as 1,539 rupees under the debtors. Note that these 1,539 rupees amount of discount on debtors should be subtracted from the debtors amount. There is one more thing that I want you to pay attention to. Here we have considered the new provision. You have to remember that we don't consider the old provision here. It will be considered in the profit and loss account under the bad debts, but not here. So for solving any problem in this chapter, when you are posting the debtors, always look for further bad debts, new provision for doubtful debts, and discount on debtors and subtract them. You should remember this. Now from the debtors amount of 82,000 rupees, If we subtract the further bad debts amount of 1000 rupees, also subtract the new provision amount of 4050 rupees, and also subtract the discount on debtors amount of 1539 rupees, we get 75,411 rupees. With that, we have completed the posting of the debtors and the corresponding adjustments on the asset side of the balance sheet. Let's now take up the next entry. Now, as we can see, the next balance that we should post to the balance sheet is bills payable. As you know, the bills payable are liabilities for the business. So, it should be posted on the liabilities side of the balance sheet. Also note that the balance of this bills payable is 22,000 rupees. So, let's first write the bills payable on the liabilities side of the balance sheet. Let's then write the bills payable amount of 22,000 rupees in the amount column. With that, we have completed the posting of the bills payable related entry on the liabilities side of the balance sheet. Let us now consider the next balance in the trial balance. As you can see, the next balance that we should consider is that of loan, which has a balance amount of 34,800 rupees. Also note that as this loan is a liability for the business, it should be posted on the liabilities side of the balance sheet. So let's first write loan in the liabilities column of the balance sheet. Let's then write the loan amount of 34,800 rupees in the amount column. With that, we have completed the posting of the loan related entry in the balance sheet. Let us now consider the next balance in the trial balance. As you can see, the next balance that we should consider is related to fixtures and fittings. As you know, the fixtures and fittings are assets for the business. So this should be posted on the asset side of the balance sheet. Also note that the balance amount of these fixtures and fittings is 20,000 rupees. With this information at our hand, let's now proceed to post this entry into the balance sheet. Let's first write fixtures and fittings in the assets column of the balance sheet. Let's then write the corresponding amount of 20,000 rupees into the amount column. There is one thing that I would like to highlight here. The fixtures and fittings are depreciable assets. So you should always look for any depreciation to be considered or adjusted when posting these assets. But in our case, the depreciation is considered only for the building. So we don't have to consider the depreciation for these fixtures and fittings. But the point to be considered is that you should always look for depreciation when posting such assets in the balance sheet. So with that, we have completed the posting of the fixtures and fittings related asset entry into the balance sheet. Let us now consider the next entry in the trial balance. As we can see, the next entry to be considered in the trial balance for the sake of the balance sheet is that of bills receivable. Also note that the amount of bills receivable is 50,000 rupees. As you know, bills receivable is an asset for the business. So it should be posted on the asset side of the balance sheet. With this information at our disposal, let us now proceed to post this entry on the asset side of the balance sheet. Let's first write bills receivable in the assets column of the balance sheet. Let's then write the corresponding amount of 50,000 rupees in the amount column. With that, we have completed the posting of the bills receivable asset related entry on the asset side of the balance sheet. Let us now consider the next entry in the trial balance. As you can see, the next entry that we should consider from the trial balance is that of building asset, which is worth of 1,10,000 rupees. Also note that we calculated the depreciation on the building. So we should also consider the depreciation when posting this asset. With this information at our disposal, let's now proceed to post this asset on the asset side of the balance sheet. Let's first write building in the assets column of the balance sheet. Let's then write the corresponding amount of 1,10,000 rupees. Now, as we have already discussed, we should subtract the depreciation from the book value of the building. So let's write less depreciation under the building asset entry. As we have already calculated, the depreciation on the building asset is 6,600 rupees. So we should subtract these 6,600 rupees from the building assets book value. Now from 1,10,000 rupees, if we subtract 6,600 rupees, we get 1,03,400 rupees, which is the current book value of the building asset. With that, we have completed the posting of the building asset related entries in the balance sheet. Let us now consider the next entry in the trial balance. As you can see, there are no more entries in the trial balance that are required to be posted into the balance sheet. So let's consider the adjustment related entries that should be posted into the balance sheet. As you can see, the adjustment entry that should be posted into the balance sheet is that of commission received in advance, and the corresponding amount is 1,000 rupees. As we have already discussed, the commission received in advance is a liability for the business. So it should be posted on the liabilities side of the balance sheet. With this information at our hand, let's now proceed to post this entry on the liabilities side of the balance sheet. Let's first write advance commission on the liabilities side of the balance sheet. Let's then write the corresponding amount of 1000 rupees in the amount column. With that, we have completed the posting of the advance commission related entry on the liabilities side of the balance sheet. Let's now consider the next entry to be posted into the balance sheet. As you can see, the next entry to be posted into the balance sheet is related to accrued rent and the corresponding amount is 2000 rupees. Note that this is not rent to be paid, it is rent receivable. So it is an asset for the business. So it should be posted on the asset side of the balance sheet. With this information at our hand, let's now proceed to post this asset on the asset side of the balance sheet. Let us first write rent receivable in the assets column of the balance sheet. Let's then write the corresponding amount of 2000 rupees into the amount column. With that, we have completed the posting of the rent receivable asset related posting on the asset side of the balance sheet. Let us now consider the next entry. As you can see, we mark that the next entry to be considered for posting in the balance sheet is related to the outstanding salary and the corresponding amount is 1000 rupees. Note that the outstanding salary is salary that is not yet paid to the employees. So it is a liability of the business and should be posted on the liabilities side of the balance sheet. With this information at our hand, let's now proceed to post this entry on the liabilities side of the balance sheet. Let's first write outstanding salary in the liabilities column of the balance sheet. Let's then write the corresponding amount of 1000 rupees into the amount column. With that, we have completed the posting of the outstanding salary liability related posting on the liabilities side of the balance sheet. Let's now consider the next entry to be posted into the balance sheet. As you can see, we have marked that the next entry to be considered for posting into the balance sheet is that of prepaid insurance and the corresponding amount is 800 rupees. Note that the prepaid insurance or insurance paid in advance is an asset for the business. So it should be posted on the asset side of the balance sheet. With this information at our disposal, let's now proceed to post this prepaid insurance related entry on the asset side of the balance sheet. Let us first write prepaid insurance in the assets column of the balance sheet. Let's then write the corresponding amount of 800 rupees into the amount column. With that, we have completed the posting of the prepaid insurance asset related entry on the asset side of the balance sheet. Let's now consider the next entry to be posted into the balance sheet. As you can see, all the debtors related adjustments are already posted into the balance sheet while posting the debtor asset. So the only thing that is left out is the closing stock, and the book value of this closing stock is 32,000 rupees. As you know, the closing stock is an asset for the business. With this information at our disposal, let's now proceed to post this entry on the asset side of the balance sheet. Let's first write closing stock in the assets column of the balance sheet. Let's then write the corresponding amount of 32,000 rupees into the amount column on the balance sheet. With that, we have completed the posting of the closing stock related asset entry into the balance sheet. While analyzing each of the balances, we marked few entries with a circle to indicate that it should be posted into the balance sheet. Now you can see that all these entries are posted into the balance sheet and there is nothing left out to post into the balance sheet. So it is now time to find the totals in the balance sheet. The total on the liabilities side of the balance sheet is 2,83,611 rupees. Similarly, the total on the asset side of the balance sheet is 2,83,611 rupees. So the balance sheet is now balanced. With that, we have come to the end of this problem. Thanks for watching.
Edixit.com is started to promote effective and efficient learning process to help the students with their learning requirements. To watch all our videos, please subscribe to our channel. Also, please click on the bell icon to receive a notification as soon as a new video is published. Please click on the like button if you like this video. Thanks for watching.